General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right. That was the end of August. This is September. First, let's make sure this is the cycle, because this could be week 5. Forex or market options market. September 1, 2, 3. Yep. So options expiry is the 19th. So it's going to be week 5. In fact, let me copy one of these. Okay. Week 5 is always choppy. The 25th through the 29th. 25th, 20th. Sentiment. I think sentiment is still bearish. Bearish actually went down. It was 46 last week. It's 40 this week. Bullishness went up 1%. Cash on the side stayed the same. Biggest takeaway is sentiment is not one-sided. Bears are winning, but only by a little. The fix COT, CFTC. Let's do CBOE. And on the VIX, we got commercials mostly playing long, non-commercials playing short, commercials holding the open interest. So let's see. Open interest is controlled by the commercials. Take this all the way out. Open interest. So they got all the volume and most of the commercial contracts positions. So we can expect increased volatility this week. Positions. So I don't think it's a big news read this week. Week 5 never is really good for news. Yeah, a lot of orange photos. It ain't nothing going on. Mm, see here. Thursday's unemployment. PC Friday. So this economic calendar, major impact news. It's not until Thursday. Um, as far as a pivot point, it's none of this week is so impactful. I can pinpoint when the high or the low the week will be made. None of these GDP unemployment is usually good, but Powell had that speech at the Jackson Hole. He was saying everything was chill. The FOMC minutes, they said they wasn't even really studying that employment data that the news was tripping on. They said they was looking at inflation just because the sectors that employment data that we did lose, like the jobs or whatever for was not nothing too detrimental to the GDP. It was mostly government jobs. Let's see, it's this. Fed Watch, see Fed Watch. The chance of ease actually went up. It was down to 70 something Thursday. So we went back up to 84%. Kind of hanging around this 84. Chances of rate cuts went up after power speech. Now the thing is, people are guessing whether it will be a 25 basis point cut or a 50 basis point cut. So we getting rate cuts. Market's back at all-time high. Everything's going crazy at the same time. Let's go to earnings. That's what I think I did do earnings here. Let's see. Because it's NVIDIA this week. Send me to it. Let me just make sure I'm not missing nothing else that's important. Yeah, NVIDIA is the only thing that's important. Snowflake is kind of important. And I also noticed with the rate cut, small caps is finna go crazy. The Russell's going crazy already. That's all it really needed. So it is a good time to start picking out the companies you want for your portfolio. NVIDIA is it's Wednesday after market close. This is most impactful release of the week and could set us up for a Wednesday midweek reversal. Mhm. That's going to be the event that we want to trade. Baba, man, I haven't even looked at that chart in so long. It's crazy. I bet they're doing good too. Boom. Bed watch. Option expiring. I need the dollar on a daily. I haven't had to use the web browser in forever. Trade barometer. Get the dollar. Doing what it's supposed to be doing. All right, this is the next level. The way it rejected off that line is way too perfect. Make you just appreciate the lines. Okay. Order flow is confirmed. Um, note the last candle took out multiple lows. If we flip here, this sell side liquidity sweep could set up for a bullish run. So we not out the woods yet. Not out the woods yet. We need to take range low. Bearish. So the last candle took out multiple lows. If we flip, yeah, basically it's just saying with the way that this candle took out all these lows right here, the next candle could be an up candle. This is set up for a real, real big run because we don't take out all these lows and not continue without really continuing. Knowing price just how beautiful it is. It's just we swept this. We already confirmed bearish. We want to sell. It's week 5. We can just chop in between here and just piss people off until the middle of September because of seasonality. I think that's happening a lot too. COT for the dollar and NASDAQ. What the fuck is I think I hit the wrong button. D4 biodiesel, Maryland compliance. Man, they trading everything. Some of that stuff might be a scam. It's that can't all be legitimate markets. See, non-commercials hold control of the dollar. You can tell by the open interest. Non-commercials got 60% of the short open interest, 17% of the short contracts. There's no commercial participation. It's like 30%. So they basically running the dollar. All the commercials are probably messing with Nvidia and gold. But the open interest is controlled by commercials. And they hold control over the short position. I don't know why um, there's no commercial participation in the dollar. Or because Bitcoin is just other assets. Mm, that's the y'all went too far. They put Solana on the CME. Okay, I didn't go too far. They added more stuff to the CME. Yeah, XRP, Solana, micro Bitcoin. Here we go, NASDAQ. I'd like to add more crypto to this list. Let's see here. Oh, matter of fact, let me throw this in chat. Chat. Just go here because it's over here. Chat. Mm. Well, I wonder if I can update this because it's 4.0, it should be 5. Okay, it's breaking it down. Total net positions, boom, commercials, boom, boom, boom. K0, who's net bullish, large speculators, the bears of the commercials, latest position and using only active traders, commercials, got minus 5,000 active, non-commercials got plus 9,000 large, non-reportables are selling too. Why are commercials buying? No, it's perpetual bull market, probably. Expected price behavior. Large specs are strong net long. Commercials are slightly or significantly net short. The market is potentially overbought. Commercials are hedging into strength. Small traders are bearish, often in contrarian bullish signals. So it say whatever the small traders do, fade them. So the small traders are bearish, just buy Larry's code commercial in their position. All right. Boom, boom. Yeah. Let's see seasonality. Seasonal high December. We're heading into a seasonally strong period. This creates conflict. Seasonality, NASDAQ tends to rally. Commercials are selling. You know what's a funny thing to I was listening to this radio program. It wasn't even trading related or nothing, but they're talking about like politics and everything. They're like, "Oh yeah, the stock market is at an all-time high. Life is good." And one of the dudes on the Dude podcast was like, "Yeah, but like gold is at an all-time high too, so that's a warning signal. We can't be in a perfect economy with gold flying." And I thought about that. I was like, that's true. Like we flying like a mug, but we ain't out the woodworks because we still printing money.
Nah, it's an
Gold
indication.
here.
Bless and butter.
Start with the month.
Oh, I forgot. He can't hear us.
It's this. Okay. This month, this is the last week of the month too. We took out monthly liquidity. We didn't sweep this monthly liquidity. I think we're gonna close just in between here. I don't even see us making no type of move. Nvidia, though, I might hit my August TP. You just never know. Nvidia is one of those ones. Hold on, let me see. I don't know. I have to look. Let me go look and see what's going on because you should be good. See this. He's still on tap. Oh, we would get it. Get it last week with on the news. But Nvidia is this week, and the market is still bullish. Buying before Nvidia release earnings. Seems like the logic for this week. Look at how he came all the way back too. This was like a little perfect wig rejection. It's textbook. This is still a huge liquidity pool down here. Even with this wick coming up, we're still close below this. This just looks like a retracement. And we're in this ugly range. You can even see how it's really no targets here. We got previous week's high, previous week's low, and then all-time high. So this week, there is no trend. weekly chart seem to have just finished the retracement. Let's go to the daily, see if we actually see something. Okay, got this down. This up candle closed above two down candle. That's strong. Dug into this. This is strong as well. I don't like this candle. I just don't like candles with these long wicks in it. It's just, it's tacky looking. This Monday's high from last week. This high is not safe. There's a lot of stuff up here. And knowing it's still summer, we still could get this run to the high and then this run back to the low, like in this order. But the delivery be so janky and to be like when you're not expecting it, or London. Going into the week though, this candle, taking these candles like this high and this low, it'd be like my range going into this week. Just because it's like a bullish dealing range. I want to see if this low holds for buys. This high break. Let's turn around. Oh, right there. Should just push. Thinking the two down candles. We closed above. Should act as bullish order block. If we are truly bullish. Buys from here. That allows for good retracements going into the week, but I wouldn't even demand this last down candle because this candle didn't take no liquidity and this candle kind of just chilled inside of this candle between this high and low. So it's just an inside bar anyway. But buys should come in here. This should hold. And I want to see Monday how I traded through. Daily order block or daily bullish order block. Should support higher prices. No Nvidia this week on Wednesday. And Thursday is unemployment. And I believe GDP with PC on Friday. So going into the week, if we use the order block on Tuesday of the week, I will be okay with 1% risk for a swing trade. Let's go here. I'm not done here. Oh, I hit this my other browser. Did something move? Hold up. I think this was somewhere else though. I think this was here. Okay, boom. We came up here. Completely destroyed this breakaway gap. I don't even need this here. This old range low still hasn't been hit. I'll keep that. Monday's high still cool. It'll end up turning into previous week's high. Don't need this level. Yeah, I kind of like this. Low, higher low, retracements. I like buys here, especially if we just reject off this fair value gap paired with this daily order block. I'm gonna set an alert here. Now that high is made with a down candle. Swing high is supposed to be up candles, not down candles. So that high is like the perfect target. They play out. Hmm. All right. Buys this week. I think Monday will gap up. Or I think Sunday is going to gap up because of power news or Fed fund rate speculation. So I got to wait to Tuesday and Wednesday. That's going to be the best days. Tuesday if it's low of the week. Wednesday before NVIDIA. After NVIDIA could sell off. You just never know. But I think retention for stocks is good at all time high. I don't think people really sell off like that. I think that's that. Yep, that's that on that. Export, boom. Let me stop this.